Hey everybody, welcome back to the channel. We are back with another episode of Daily at Palantir. I am wearing a turtleneck and a hat because I'm in New Jersey and it's getting pretty cold. And it's like actually we're starting to feel the cold now, getting into December, November 29th right now. So that's why you see me in this attire. Today we got a lot of things to talk about. Number one, we've got to talk about the new Amazon competitor to Palantir. Biggest story of the day. Very interesting. I have some thoughts around the actual product and then thoughts about Amazon's go-to-market distribution strategy. So I want to talk about that. Number two, we got Rishi Sunak, who was in the UK Parliament defending his decision to give Palantir £330 million against some of the critics. So we're going to take a look at a clip of what he had to say. And then finally, I found a really interesting chart around Palantir's revenue, gross margins, and overall growth, and stuff that's going down, stuff that's going up, and sort of hypothesizing what were the reasons for why that happened in the way that it did. On top of that, I want to talk about the short float now on Palantir because it did decrease from last week. Let's get into it. All right, first thing we'll start off with is some price action right here. Here we go. Palantir, $20.12. We were down around $18.70 yesterday, recovered around $19.40, ended $19.90 last night, and today, nice 2% boost at $20.11. The entire market is up. S&P was at 458 about an hour ago. Right now, S&P at 455. So main reason for the price action, quite frankly, is that the market is up. And as you can see on the right-hand side of my screen, a lot of stocks are red. Stocks are green. It's really hard to find the red stocks. You got some of them here. It's actually interesting to see big tech, Meta, Microsoft, Google, Amazon are all down, while we've got Robinhood at $9, SoFi up 5% on the day, or now up 2%. It was up 5% on the day at $7.50, and we got Palantir at $20. So obviously we're seeing a little bit of rotation potentially from some of those large cap big tech stocks into some of the more smaller growth names. But as a result of that, Palantir is up 2% on the day. On top of that, I wanted to mention here, Palantir's short float went from 155 million shares 2 weeks ago, now down to 146 million shares. So that's a decrease of about 5.7% from last month. From last week. So about 9 million shares less got shorted, which actually proves that some of our hypotheses were correct, that the shorts were covering. Last week when we saw that Palantir run up to $21.85, at least 9 million shares of the short float was covered. Palantir has about 2 billion shares outstanding, so about 8% of the float, 146 million shares are still sold short. But the shorts didn't really double down. We didn't see that number get higher as the stock got higher because the shorts obviously got a little bit scared that, hey, the stock's at 21. You never know if it goes to 23, 24, 25. We're really going to be drowning in these shorts. So maybe let's cover. So I think the thing to take away there is that the momentum and narrative, at least from the short sellers of the stock, started to switch a little bit into fear versus, oh my God, this company is extremely overvalued. Let's even double down on our short because we're going to get an even better short position, to, hey, AI is real. The company is real. They're going to bring in $600 million next quarter in revenue. Like, yeah, the growth is not amazing, but the growth is going to get there. There's a lot of parts of this thesis that maybe our short thesis didn't take into account. So let's just cool it. And some of them even said, let's cover. So we are seeing that happen now with the stock. Okay, so we talked about the stock and we talked about the short float. Now I want to talk about the bigger story of the day, Amazon. Amazon has just announced its own chat GPT for the enterprise, basically Palantir AIP competitor. Core focus is security and governance. Here's the CEO of AWS speaking on what's going on, why this is happening, why they're introducing it. And then I have some thoughts I want to share about the product itself.
Q, all the many customers that have been previewing Q in private are incredibly excited about it.
It's called Amazon Q.
And we think it's going to be transformative in helping to reinvent how people work. I mean, the existing chatbots or generative AI assistants are great for consumers, and so many of us, of course, have used them, experiment with them. But unfortunately, for the most part, they don't really work at work. They don't really know who you are. They don't really have access to your repositories. And for the most part, they've lacked security and privacy characteristics that are pretty much requirements for enterprises and many other companies. So Amazon Q is going to be tailored and customized to your business. We've built connectors to over 40 major systems, including Microsoft 365, including Google systems, including Salesforce, Zendesk, ServiceNow, and many others. And Q is going to be able to access those if you give Q access to them, but it's going to respect your privacy.
All right, so this was really interesting. And the reason this was interesting is because, and I'm going to share what the product looks like while I'm talking in the background. It essentially is a generative AI powered assistant for work that is very similar to what AIP looks like. So for what the AWS CEO was basically saying, and you can see in this video right now, you need secure data and a platform that is trained on the company's specific data, the enterprise's specific data, to be able to actually get business intelligence and business results. Large language models are taking over the world. We all know that's the case. So if LLMs are becoming a commodity, and really ChatGPT is not that exciting, but the operational workflows you can integrate ChatGPT into the enterprise are more exciting. If you could actually build a quote-unquote ChatGPT for the enterprise that was trained on customer-specific data, you could unlock a lot of business intelligence. That is the sort of core thesis around AIP in and of itself. Now, what is the moat of a product like AIP? Well, from Palantir's perspective, it's governance, it's security, it's the ability to unlock AIP's true value by connecting your business intelligence to your business data, which is the ontology, which is Foundry. AIP kind of really is this Trojan horse to get people to buy Foundry, and Foundry is like a real product that, you know, encompasses everything. It can become sort of that true modern operating system for the enterprise. And, you know, that's what's the exciting element around AIP. So as you can see right here, right, there's a ton of different use cases. I mean, they're looking at code. You're saying, hey, provide me a use case for this code, explain what it means in the context of the business. And all the benefits we saw from Palantir's AIP, Amazon Q is essentially trying to replicate within their own platform. A couple of pieces of analysis on this that I think are important. First, let's talk about the bearish case around this in the context of Palantir. Then we'll talk about the bull case. Bear case. Amazon has a lot of distribution. I mean, AWS prints $62 billion of revenue per year for Amazon. And it's part of the reason Amazon gets the valuation that it gets, right? Because the retail business doesn't really produce those margins. But you have like 85% gross margins on AWS because it's software, it's code, right? It's a product that really scales at a fundamental level. And the thing about AWS is because they have all that distribution, all that scale, it is very easy to then go to a client, go to a customer, when especially, you know, they have thousands of people working in AWS sales who get paid literally to just call people every single day that are existing clients of AWS or non-existing clients and say, hey, we've got something new. Do you want to check it out? The beautiful thing about Amazon introducing this in the context of how it can affect their business and make AWS even more stickier, more stickier is not a correct phrase. I was corrected many times in the comments about stuff like that. Is because when you have a client that's already building their entire applications on top of AWS and all the different hundreds of microservices that exist within AWS, then the question becomes, all right, if you're already building everything on top of Amazon and integrated within Amazon and all your data is in the S3 storage and all of that stuff, well, what if you could just pull intelligence and insights from that data via Amazon Q, which is, again, essentially Amazon's AIP. So kind of think of AWS almost as like Palantir's Foundry, which is encompassing so much data, even though it's not exactly like that, right? It's not really an ontology, but it just has so much of your business intelligence locked into it, right? Business data locked into it, that you can now extract that intelligence with something like an Amazon Q. The way Amazon really scales this is if they go to clients and they're like, hey, obviously you need this. This will unlock massive potential. You know, here's what it costs. And they're like, yeah, well, Palantir seems to have a better pitch. And they're like, hey, we'll give it to you for 90% off. Then it's like, and we'll give you a good deal on more AWS credits, or we'll give you a good deal on compute, because Amazon's bread and butter is selling compute. They really don't care about that much other stuff, right? Like they just want to sell compute, but they build services and services on top of their core business, because if they can offer you more stuff, you'll get more excited, you'll pay for compute. So from that perspective, the bear case against Palantir is that Amazon has massive distribution. That massive distribution is going to be able to unlock massive amounts of value for clients that are looking to get something like this, but don't want to go to a Palantir, don't want to incorporate a Foundry, don't want to have a modern operating system for the enterprise. They just want to have something quick and easy, ready to go. Like my startup uses AWS, Aldia.io, and we use AWS because it's simple. It's easy, right? So like you got companies like me from companies that are the Fortune 50 companies in the world that theoretically could unlock a lot of value via AWS just by getting upsold something like an Amazon Q. Now, that's the bear case for Palantir. Palantir's market starts to get a little bit more competitive for them to be able to sell the AIP to these clients. The bull case, which I think ultimately does outweigh, I think there are two levels to this. Number one, we don't know what the governance and security levels of a Amazon Q really looks like. I mean, they're saying it's secure, they're saying it's going to be protected, all that stuff. That's fine, and I believe it will be. But we've seen the wild use cases of ChatGPT in the enterprise and seeing hallucinations and things of that nature. So I don't necessarily know if the product itself is going to be to the utmost standards of security and governance of something like a Palantir. Second of all is the actual business intelligence results. So one of the things we know about Palantir's AIP is that they have a mechanism to be able to synthesize and deliver results, which is contextualized by this idea of KLLMs. And the whole concept of KLLMs is that you take a multitude of large language models and you run a query, a user query, through these large language models, and then it produces this result that is synthesized through the best version of what that result could be through every single large language model. And that's intense technology to create. It's not easy to create that stuff, right? Like, you have to have the smartest people in the world being able to come up with that stuff instantaneously to be able to deploy those types of things. And so Palantir is using that as their methodology. And so from an actual operational perspective, in terms of the answers the user is getting that allows them to then take action, which is the whole value of AIP, that potentially could be better than Amazon Q as well. The final thing I have to say for why this is really good for Palantir, and this is not something that I think shareholders should be that concerned about, is it is expanding the market. I mean, if Amazon wants to get into this race, right? Databricks, Snowflake, Microsoft, all these guys are like, so LLMs are not just chatbots. LLMs are a new form of compute. And that's the other exciting part here. Because I think a lot of people forget about what the business model looks like for these LLMs and AIP as well. Customers pay as they query more stuff, right? Just like on ChatGPT, there's a $20 a month subscription. But like if you use a lot of these other startups that are using OpenAI's API, as you type stuff in, you are charged, even if it's like 0.0005 cents, whatever it is. That's how the business model works. That's how these companies make money. So LLMs, if that is the new human interface of how people are interacting with information, and it's not just a search box, it's more so an interactive model that has access to all of the business repository of information, then the more you search on the LLM, the more you use it, the more you type stuff in, the more the company theoretically is going to be able to make money off of you. A, because you're getting value, so you're going to pay for it. B, from the actual pay-as-you-go model of using these LLMs. So LLMs are a new form of compute. And what I think that's signaling to the broader equity markets, especially some of the big tech players, is, oh my goodness, if this is a new form of compute, then we've got to get into this. And even if we're not going to win the whole market, we have got to have a positioning. Palantir obviously is staking kind of the company on this, but a lot of the other big tech players are like, even though this is not our main product, we've got to have some type of positioning of this in the market, which to me expands the total addressable market. Does it make it more competitive? Sure. But does it also mean that, a random client that was on the edge of this is now thinking, I have to do this? Yes. Because if your competitor has a website and you don't, you're screwed. So I think it's kind of in the context of, I believe this is going to be good for Palantir's market. I believe this is going to make the TAM grow. I believe that 8 to 10% of AI spend that enterprises are saying they're going to commit to in 2024 is going to get higher and higher over the next couple of years, because they're going to see the operational use case of LLMs. And that's just going to mean more inbound for Palantir, more ability to do boot camps, more ability to show proof of concepts, more ability to really show their product off against other Amazon products. I mean, Amazon's not doing boot camps across the entire world trying to get people to understand how they can use their data on a new product instantaneously, right? And maybe they are, but it's not necessarily in the same exact way that Palantir is doing it, trying to sell a very thick product via this bootcamp strategy, and then just become intertwined within the organization in and of itself and become incredibly sticky. I think that Palantir's go to market and actually showing those use cases versus some of the competitors that really don't care about showing the use cases, they just care about upselling you so they can sell more compute, is also going to play into Palantir's moat. It's just going to be that much better of a product, and there's going to be more people to sell that product to, because the big guys, Amazon and Microsoft, are getting more people excited about having a product like this in their organization. So overall, to me, it's bullish. Obviously, there will be more competition, but we will see what happens with Amazon Q around Palantir's AIP. All right, let's move on to this clip by Rishi Sunak. This was posted by Palantir Chad. Great Twitter account if you don't follow him. He was at the UK Parliament, and things got a little dicey by someone basically saying, hey, why is Palantir getting this money? Here's what Rishi Sunak, a week after giving Palantir the deal, had to say.
Mr. Speaker, NHS England has awarded £330 million to Palantir, a controversial technology firm, to help it recover from its pandemic backlog, despite deep concerns among many healthcare professionals about privacy, ethics and the safety of patient data. In light of the government's recently commissioned report on unifying health data in the UK, can the Prime Minister confirm that no attempts will be made to force the Scottish Government to release the personal data of Scottish residents to any centralised system?
Mr. Speaker, as the Honourable Lady knows, healthcare is devolved, but we will look for every opportunity to improve patient care and reduce waiting lists in England, and that's what we're doing, developing new technology which has had a proven track record in bringing down waiting lists and improving the optimisation efficiency of how theatres are scheduled. That's the type of thing that we need to do to ensure patients get the care they need and we can get efficiency in the NHS.
So really interesting. It was a small clip, about a minute of him talking, but I thought The reason I want to pull that up is because of a couple things. Number one, Palantir got the deal. So whether or not, people can complain all they want in the parliament, Palantir got the deal. It was signed. The money is in the bank, or going to be in the bank over the next couple of years as they reach milestones. The deal is done. Palantir won. And so as a result of that, I think Rishi Sunak, as a techno optimist for the UK, is, he's kind of just like, look, we've shown in the pilot results that wait times and backlogs have gone down. And that means that in order to actually fix the entire system, you got to let us expand it to the entire system, which means you got to be able to let us spend some money for the companies building the technology to help us fix the problem. So I think Rishi was he was really, fast there and didn't spend too much time on it, because at the end of the day, he's not trying to convince people anymore about giving Palantir the deal. Palantir got the deal, and the results will speak for themselves, no matter how much the British media wants to keep criticizing and say Peter Thiel, Donald Trump, all this absolute garbage nonsense. By the way, it's important to question if Palantir is ethical and privacy, data concerns, etc. It's just after you make that question, which you're allowed to ask, and you get the answer from a multitude of resources saying, yeah, they're not going to steal your data, they're not going to do anything with your data, they can't even make any money off the data, then you have to change your mind. And the problem is these people are not changing their mind. They are ideologically so dogmatically tied to a certain narrative, which is what I think has become the root cause of most of human suffering. I mean, this idea that you simply cannot change your mind when the facts disagree or the perspectives disagree with your overarching opinion, then you fall into a rabbit hole and you're not able to actually go forward and make progress. Rishi Sunak's like, you know what? The results will speak for themselves. And once we get the results, people will have to realize that Palantir probably was the best decision to fix the NHS. All right, final thing I wanted to talk about today. Nice little chart I found. I want to show the chart first, and then I want to show some thoughts I had, and then I want everyone else in the comments to respond to this question as well. So here's Palantir's metrics: revenue growth and margins. As you can see, their margins, we'll talk about gross profit margins, went from 69% in 2020 down up to 79%, right? So pretty much in line, that 79-80% level. Growth, which is the revenue, the blue bar, we're seeing it come from 48.6% Q1 2021 down to about 16% Q3 2023. So obviously growth has fallen down, but their operating profit margins, the thing that creates the GAAP profitability that is so important for us to become part of the S&P 500, that has gone from negative 95%, which means they were losing 95 cents on every dollar they generated, up to about 1.71%, which means they're making about 1 cent for every dollar that they generate, which is a very, very good thing. And what I said here on Twitter was, although Palantir's growth has slowed, they sacrificed it for increasing their operating profit margins. So here's the question, and this is what I would love everyone in the chat or in the comments to answer as well. Why do you think they chose profits over growth over the past years, now with 4 quarters of GAAP profitability? A few reasons I have. The macro with high rates made it hard to sell their product uniquely to enterprises, because their product is not just a small little product, or it's something that actually requires a sales cycle, and it's a thick product to put into an enterprise. The go-to-market strategy was not defined. Management said this themselves. Now it is defined with Bootcamp, so I think we have a more definitive strategy. And there was no overwhelming excitement in 2022 around their tech until the AI hype brought in a massive inbound that can now be capitalized on, and that's a real thing. That's not a meme-ish reason why I think the stock is going up. I think that's like, hey, sometimes you have to be at the right market at the right time. They've been working on AI for the past 20 years with all the contracts they've been able to secure, the tech they've been able to build, the intellectual moat they've been able to build, but the excitement for the market wasn't there. Once that excitement came, a company like Palantir was just like the well-positioned company that it was. It was in the right moment to be the company to capitalize on AI. Shares up 215% year to date. It has done what it needed to do in terms of capitalizing on that excitement, which brought in a massive amount of inbound, and now they have a lot more clients that are interested in buying their stuff. So to me, the growth didn't slow down because of anything bad about the product or the tech. Rather, it seemed to be a variety of circumstances all compounding together. And so Palantir focused on profits and now will eventually be in the S&P 500 if that growth can re-accelerate to that 30% level that we wanted to get to. While maintaining profitability, I think things get very, very exciting for a company like Palantir. There's still a lot of execution risk for them to be able to do that, but if they end up doing it, then this gets really exciting for Palantir. So let me know in the comments what you think were the main reasons for why they sacrificed growth over profitability, and why they ultimately chose to shape the company around getting profitable first before having massive amounts of growth. Snowflake is going to have earnings today. We'll talk about that tomorrow. Snowflake, not GAAP profitable, but they're growing above 30%, right? So they're sacrificing that profitability for growth. Why do you think Palantir went the other way? All right, that's it for me. Thank you guys so much for listening and watching. I will have Dan Ives on the morning open at 11:15 a.m. this Friday. It was supposed to be 9:45 a.m., so it's going to be extended to 11:15 a.m., so I'll be live for almost 3 hours, Friday morning, 8:45 to about 11:45ish, and Dan Ives will join us in those last 20-30 minutes, and we'll talk stocks, we'll talk Palantir, we'll talk Microsoft, we'll talk Apple, we'll talk a bunch of different things. So thank you all for being here. Hope you guys can make it on Friday, 8:45 a.m. Eastern Standard Time for the market open. And again, let me know your thoughts in the comments. Why do you think Palantir sacrificed growth for profitability? What do you think the strategic direction was, or the reason for them to do that, or were they even forced to do that going into 2023? Thank you guys. I'll see you in the next one.